Good evening, everyone, and welcome to CareSuper's annual member meeting for 2025. I'm Ning Ning Lyons, and I'm so pleased to be your MC this evening, joined by my CareSuper colleagues who are passionate about helping you build your retirement confidence, and so proud to be a part of a fund that genuinely cares and deeply values our connection with all of our members. Before we begin, I'd like to remind everyone that this meeting is being recorded and will be posted on our website within 30 days, along with the meeting minutes. This means anyone who couldn't make it tonight will still be able to watch the recording. By joining this webinar, you're giving your consent for it to be recorded. Tonight, we're broadcasting from Melbourne, on the lands of the Wurundjeri, Woi, Wurrung and Bunurong peoples of the Eastern Kulin Nation. CareSuper acknowledges the traditional custodians of the country throughout Australia and their continuing connection to land, sea and community. We pay our respects to elders past and present, and we extend that respect to all Aboriginal and Torres Strait Islander peoples joining us this evening. Now, tonight's annual member meeting is your opportunity to hear directly from us, your fund's leaders, on how we've performed, our future direction, and to have your questions answered directly. You'll hear from three of our key leaders tonight in our opening presentations. Our Chair, Linda Scott, our CEO, Jason Murray, and our Chief Investment Officer, Suzanne Branton. Linda Scott, Chair of CareSuper's board, is responsible for the governance of the fund. Linda will share an overview of the key strategic issues that the board has overseen this year and look ahead to what's next as CareSuper continues to evolve. Jason Murray, our Chief Executive Officer, leads the CareSuper team in executing our strategy and the day-to-day leadership of the fund. Jason will talk through the key results and initiatives over the past year and share the future direction of our fund. And our final presenter will be Suzanne Branton, our Chief Investment Officer, who together with her team is responsible for the fund's investments. Suzanne will discuss the fund's investment performance over the last financial year, current market conditions, and provide insight into what's on the investment horizon. Now, following these presentations, we will be holding a live Q&A session. And tonight, we're also joined online by our trustees, leaders from our executive team, many of our staff, as well as our actuary and external auditor. Welcome, everyone. I would like to thank our members who have submitted questions to us ahead of the meeting. We're really pleased that you have taken an interest in your fund, and we'll respond to as many of your questions as we can tonight. We have also received many questions that are specific to our members' own circumstances. We will ensure our skilled super advisors get in touch with you individually to help you with your queries. To take part in the live Q&A tonight, please type your question into the Q&A function on your screen. You can submit questions at any time, but they will be held until the official Q&A at the end of the presentations. And of course, any questions we don't get to tonight will be answered and posted on our website within 30 days. Now, a reminder that in this event, we are not able to respond in this forum to questions of a personal nature. If your questions relate to your own financial situation or needs, one of our team will get in touch with you. Alternatively, please just reach out to us directly and we can help you. So at CareSuper, we are proud to be an award-winning profit-to-member industry super fund. Our vision is to be Australia's most trusted partner in retirement confidence through exceptional care and connection. We provide super, retirement and advice options when you need them to help you feel confident on your journey to and through retirement. We aim to strike the right balance between being big enough to deliver competitive products, services and advice, by amplifying your voice to advocate for a better retirement outcomes and to make a genuine impact for all of our members, but yet small enough to provide personalised care. We're always here and easy to reach whenever you need us. And this is how we ensure every member experiences true care and connection with us, the CareSuper way. No matter what industry you're in, we're open for everyone. We're committed to offering the help, guidance and advice you deserve and a unique active investment strategy which helps deliver a smooth ride. That means less bumps along the way when the markets are volatile. And of course, always an eye on strong long-term returns for all of our members. Finally, as we reflect on the last financial year, it's certainly been a defining chapter in CareSuper's journey. We've emerged a stronger, more connected fund, and we hope that tonight's meeting gives you confidence and reassurance that you're a member of a strong performing superannuation fund that truly cares for you and your retirement. Thanks so much for being a member of CareSuper, and thank you for joining us tonight. Before we get to our formal presentations, please note that the information shared in this meeting is of a general nature only. It doesn't take into account your own objectives, financial situation or needs. And you should consider seeking advice or reading the product disclosure statement and target market determinations to make sure this information is right for you. Or better yet, please just get in touch with us so you can experience the CareSuper award-winning service. Thank you, everyone, and now we'll move on to the presentations. First, I'd like to introduce our chair, Linda Scott. Linda is an experienced chair and board director. Linda commenced as a director of CareSuper in December 2018 and has served as chair of CareSuper board since April 2022. Linda brings extensive governance experience and a deep passion for serving and advocating better retirement outcomes for all of our members. Please welcome Linda.
Good evening, everyone. I'd like to begin by acknowledging the traditional owners of the land on which we all meet today and pay my respects to elders past and present. Thank you so much for taking the time to be here with us tonight. I want to begin by expressing my heartfelt thanks to each and every one of you, our CareSuper members. Your trust is the foundation of everything we do. And this year, more than ever, we've seen what's possible when we put you first. While tonight is about the 2024-25 financial year, 2025 as a whole has been a year of transformation for us. Following our successful merger with Spirit Super in November last year and a successive fund transfer with the Meat Industries Employees Super Fund just last month, we've emerged a stronger, more connected superannuation fund. We're so proud to serve over 600,000 Australians, managing $60 billion in your retirement savings. This is CareSuper's third successful merger in 5 years, reinforcing our commitment to evolving your fund to meet your needs and to make sure we keep providing you all with exceptional value and service. But we haven't just grown in size. We've also grown in purpose. Our vision is clear: to be Australia's most trusted partner in retirement confidence through exceptional care and connection. And while that means continuing to deliver strong long-term returns, it also means being there for you in the moments that matter most. For our newest 15-year-old members starting their first job, right through to our 2 members who are over 100 years old. Congratulations. Being able to answer your call quickly when you need help, providing you with advice that is personalised and easy to understand, and caring about your financial future, however you may choose for that to look. Let me share with you one of those special moments. A member recently called CareSuper in distress, seeking early access to some of their superannuation due to financial hardship. Instead of simply processing that request, our wonderful member service officer took the time to listen, understand our members' needs and look further into their situation. Through that conversation, they uncovered something life-changing. The member had previously held insurance cover and was now, sadly, permanently unable to work. That meant he was eligible to claim on his insurance and potentially access his full superannuation balance. This wasn't just a financial outcome, it was a moment of dignity, of hope, and of genuine care. And it happened because one of our staff chose to go beyond the transaction and see the person behind the account. This is the kind of care that we undertake every day at CareSuper. Our wonderful staff do this because they live and breathe our values. They're our own staff speaking directly to you, and this is what matters to us. It's what makes us different. We're big enough to deliver real impact, yet small enough to care deeply. We're so proud to resolve 90% of your queries on the first contact with us, and we'll always prioritise a conversation over a transaction. We've also continued to stand up for a fairer retirement system this year, proudly supporting reforms like the increase in the superannuation guarantee to 12% and payday super reforms, which will help to ensure millions of Australians receive the contributions they're owed. Advocating for you and working on your behalf to support priorities that will benefit you is an important part of our role in caring for you, something we will continue to do. Looking ahead, our focus is on building a fund that's ready for the future without losing sight of what matters most, you. We're investing in our people and technology to enhance your experiences, strengthen digital security, and to continue to grow sustainably. At the same time, this commitment extends to operating transparently, strengthening our own resilience and upholding the highest standards of governance to ensure we remain a trusted partner for generations to come. Every decision we make today supports a secure and more confident retirement for you tomorrow. We've recently launched a 3-year transformation program to improve fund resilience, deepen our engagement with you, and lead the way in retirement confidence. This program is designed with long-term sustainability at its core, delivering smarter digital tools, more personalised advice, and even faster service so you can make informed decisions with clarity and confidence. And we're continuing to advocate for better access to affordable financial advice because we believe every Australian deserves support to retire with dignity. As I reflect on this year, I'm reminded that superannuation is more than just numbers on a statement. It's about all of you, our members. It's about your stories. It's about the quiet, powerful work of helping someone feel more secure about their future. My enormous thanks to our board, including the directors we farewelled this year. I'd particularly like to call out and thank Maria Wilton, who served as the chair of Spirit Super from 2022 until our merger, and then went on to serve as an independent director for CareSuper. Thank you also to our nominating bodies, Unions Tasmania, the Australian Manufacturing Workers Union, Unions New South Wales, the Australian Services Union, Business New South Wales, the Victorian Chamber of Commerce and Industry, the Tasmanian Chamber of Commerce and Industry, and the Motor Trades Association of Australia. I'd also like to thank our partners and service providers for their loyalty and dedication. And finally, thank you to our outstanding staff for their enormous commitment to you, our members. And of course, thank you to our employers and to you, our members. You are the reason we exist. Together, we're building a future where every Australian can look forward to retiring with confidence.
Thank you, Linda. Next, we'll hear from our Chief Executive Officer, Jason Murray. Jason leads all aspects of CareSuper's operations, bringing over 25 years of financial services experience. Jason served as the Chief Executive Officer of Spirit Super prior to its merger with CareSuper in 2024. Since continuing as CEO at CareSuper following the merger, Jason has played a pivotal role in shaping the new merged fund and leading transformative change and strategic growth with a strong focus on building our culture and strategies that deliver long-term value for members. Please welcome Jason.
Good evening, everyone. It's a pleasure to be here with you tonight to reflect upon the 2024-25 financial year. As Linda just mentioned, it's been a year of transformation for CareSuper, enabling us to deliver real value to help you retire with confidence. Our merger gave us the opportunity to expand our services, giving you, our members, more choice, more services, and more value. As a profit-to-member industry super fund, every dollar that we earn is reinvested for your benefit. And despite global uncertainty and market volatility this year, our unique smooth ride investment strategy continues to deliver. It protects members' balances and delivers you with strong, long-term returns. And you will hear more about this from our Chief Investment Officer, Suzanne Branton, shortly. But I'm pleased to say that we remain a top-performing fund over the long term, giving you confidence that your money is invested wisely for your retirement. What I believe really sets us apart as a fund, though, is our commitment to exceptional service through members' care and connection. We were once again ranked #1 for customer experience across both the superannuation and the financial services sector this year by Customer Service Benchmarking Australia, and named Australia's highly trusted super fund in the 2025 Mozo People's Choice Awards. For us, retirement confidence is knowing that you and your money are in the right place. And numbers alone don't tell the full story about our fund and why we are different. Just recently, a member's story was shared with me, which I believe captures what CareSuper is really about. It illustrates the power of care and of helping people make informed decisions and how those decisions can shape a person's financial future. As many of our members would know, we have 2 dedicated contact centres based in Hobart and Melbourne that are powered by our own skilled and caring team. Earlier this year, one of our team received a call from a member who was homeless, distressed, and unsure if he even had an account with us. Our team member didn't just answer his query. They took the time to listen, empathise, and take positive action to support our member. Through that important conversation, he uncovered 2 accounts with other super funds the member held. He helped consolidate them into CareSuper and identified that the member could access a small portion of his balance to secure housing. He then followed up with this member throughout the week, ensuring that he had what he needed to get back on his feet. Going above and beyond can have profound impacts on our members' lives. This is the power of care. It's the transformative nature of prioritising a conversation and taking the time to understand a member's needs and circumstances and leveraging our resources to make a positive difference. But it's also a story that reminds us that whether you're just starting out or planning for retirement, the choices you make today can have a profound impact on your future. A young person who consolidates their super early and engages with a super fund could be tens of thousands of dollars better off in retirement. And for those closer to retirement, we can help ensure that your affairs are in order, providing greater peace of mind and financial security. Last year, we took over 190,000 calls from members. We handled 153,000 emails from members and employers, and we had over 7,000 live web chat interactions. We hosted 164 in-person education events and webinars, held over 500 workplace seminars, and made over 8,500 advice appointments. Since the merger in November last year, we've processed over 17,000 voice transactions, fast-tracking outcomes to ensure that no one is left waiting at a critical decision point. Almost 350,000 members have registered to use our member online portal, giving them quick and secure 24/7 access to their account. Our member satisfaction reached 88% and our ease of service scored 92%, both exceeding our targets. For us though, these are not just numbers. They represent real moments where members received the support they needed when they needed it. Rest assured, we aren't done yet. We are continuing to invest in our people, systems and processes to ensure that every experience meets your expectations for today and tomorrow. And if you haven't already, I would encourage you to give us a call, jump on our website or log on to Member Online to make sure that you're getting everything that you need from your membership with CareSuper. Now let me turn to something that's increasingly vital to all of us, cybersecurity. Each time that I talk to members, I feel compelled to talk about this because as scams evolve, we're reminded how we all have a role to play in keeping our personal information safe. While there are times that we may need to contact you about your account with us, we will never request passwords or login information via email, phone, text message, or social media, and we'll never use your personal information for any other purpose or share it without your permission. Please be careful with unexpected calls and don't ever hesitate to call us straight away if you notice any unusual activity or believe that your identity may have been compromised. We can help support you and to keep your super safe. Cybersecurity remains a top priority for us, and our in-house cyber and financial crime teams remain vigilant. From multi-factor authentication to proactive threat detection, we are investing in the systems and people that keep your super secure, and we will continue to educate our members on how to stay safe. We also have a dedicated hub on our website that can help you learn more about the steps that you can take to protect yourself, as well as what to do if something doesn't feel right. Looking ahead, our members' needs are evolving, and so are we, but we'll continue to remain easy to deal with, closely connected to our members, and well positioned to lead on retirement confidence and member experience. We'll keep listening to your stories, your needs, and your goals, because every member matters and every member's journey is different. Whether you're a young worker just starting out, or a retiree enjoying the next chapter, or someone who needs financial help and doesn't know where to start, we're here for you. Thank you for trusting us to protect and grow your retirement savings on your journey to and through retirement.
Thank you, Jason. And finally, we will hear from our Chief Investment Officer, Suzanne Branton. Suzanne has been CareSuper's CIO for the past 10 years. She's accountable for CareSuper's investment performance, the execution of the investment strategy, and the management of CareSuper's active and sophisticated investment portfolio, working to deliver strong outcomes for our members. Please welcome Suzanne.
Thanks, Ning Ning, for the introduction. I'm delighted to be here with you today to provide my comments on the 2025 financial year and the period ahead. We can now reflect on our first year as a combined fund. And as Linda mentioned, the merger between CareSuper and SpiritSuper has strengthened our position. It's given us the opportunity to expand the scope and depth of our investment function, enhancing our ability to navigate an increasingly complex investment landscape. With greater scale and agility, we're better positioned to continue making high-quality investment decisions and access a broader universe of opportunities, including some that larger funds may overlook. To get us started, I'll touch on a few key events during the financial year. Investment markets, particularly share markets, saw significant swings during the year. There were a couple of key catalysts for these big changes in direction. The first was the Trump administration returning to the White House for a second term. At times, markets were lifted by the perception the administration would be pro-growth and good for business. However, the tariff announcements in April caused a significant decline in share markets. At one point, the US market was down 18%. The second driver was shifting expectations around the likely timing and size of potential central bank interest rate cuts. And this was compounded by uncertainty around the impact that major changes in government policy in the US and in Europe would have on growth and inflation. While these influences illustrated how volatile shares can be, global shares actually finished the year up 18.5%. Turning now to the performance of our options during the financial year. We're pleased to report that despite the volatility we've seen, all of the CareSuper pre-mixed investment options delivered strong returns over the financial year. For super members in our balanced option, the return was 8.6% for the period ending June 2025. This outcome was well above inflation and slightly exceeded the long-term average for this option. Our growth option, with a higher allocation to shares, benefited more from the strong market conditions I described, delivering a 9.6% return for the same period. The more defensive options, such as capital stable, shown on the right-hand side of the chart, also did well, even though these options have greater exposure to lower risk asset classes like fixed interest and cash. Returns for pension members were even higher, with the retirement income version of the balanced option returning 8.9% for the year. If we look at returns over longer timeframes, such as 10 and 15 years, CareSuper continues to perform strongly. I'd also like to take a moment to reflect on the strong year for our sustainable balanced option, delivering 9.4% for the period ending June 2025. Responsible investing forms an important part of our investment approach. We believe that incorporating environmental, social, and governance considerations into investment decision-making can better manage risk and contribute to stronger investment returns for you over the long term. And I'm thrilled that the Sustainable Balanced Option was named Responsible Investment Fund of the Year for 2025 by Money Management Australia. This award recognises the option's consistently strong returns, robust investment strategy, and integration of responsible investment principles. Our Sustainable Balanced Option is highly regarded by several other independent rating agencies. To make sense of the outcomes we've delivered and what's ahead, it helps to first understand how we invest. Every investment decision we make is guided by what we believe is in the best interest of our members' long-term financial well-being and security in retirement. This visual shows how our Smooth Ride investment strategy works for you. It is underpinned by active management and is specifically designed to produce strong long-term outcomes and resilience through a variety of market conditions. Our strategy is applied across all of our premixed investment options, which are designed to suit a range of members and risk appetites. We believe in the power of diversification, which means we spread our investments across a mix of asset classes, so returns aren't dependent on a single asset class to perform well. This chart shows the asset classes we use across our premixed options, and the weights shown here are for the balanced option. Diversification helps deliver steady outcomes over the long term, but may mean we have less exposure to an asset class that performs exceptionally well over a short period of time. While shares did very well last year, looking forward, we are excited about the range of opportunities across other asset classes like infrastructure and credit. Our alternatives asset classes are also an important feature of all our premixed options. They've delivered strong performance and have an investment pipeline that suggests this will continue. We don't expect the coming year to be so much about shares. We see other asset classes playing a more prominent role in driving results. The value of diversification is really apparent when market conditions change, and we know this is inevitable. That's why we build portfolios designed to withstand uncertainty and volatility. I'd like to take a minute to talk about why this is so important for your long-term retirement outcomes. We've now had 3 consecutive years of impressive returns from global shares. Last year alone saw gains of 18.5%, which followed 2 years where returns were even higher. That is quite unusual, and it can lead investors to forget that markets change, cycles happen, and resilience is valuable. What happens next in share markets isn't the only area of debate. The other is the outlook for shares related to technology and artificial intelligence. It's these companies that have been the real driver of share markets. Over the past 3 years, around half of the gains in the US stock market have come from just 7 of these companies that many refer to as the Magnificent Seven. And the blue line illustrates the performance of these 7 companies with a gain of around 180%. This is more than 3 times the increase in the rest of the US share market. This presents an extraordinary challenge for investors right now. The case for continued strength in technology shares is supported by genuinely good earnings growth, innovation, and the thematic of AI. Yet, at the same time, the enormous share price increases we've seen raise legitimate questions about overvaluation and risk, leading to comparisons with the dot-com bubble of the early 2000s. This is one of the most complex decisions investors face today, and we see it in the questions we receive from members. Some are wanting more exposure, backing the theme, while others are worried about overvaluation. Now, as we do in all things in our investment program, we are taking a balanced approach with a long-term focus. You can take comfort that we and our skilled investment managers are experienced, active, and agile in our approach. In terms of the outlook, the future of this technology-driven rally in shares will continue to occupy the minds of investors, as will watching how the benefits of AI plays out across the economy, from efficiency gains to potential impacts on employment. More broadly, we see a changing investment landscape ahead, shaped by several fundamental themes. Geopolitical conflict and tariffs are two strategic considerations, influencing where to invest and impacting supply chains and trade. Now, while tariffs may not seem to have had a lasting impact on share markets beyond the announcement, they will impact long-term investment fundamentals. Whether inflation moves higher is also a key watch point, as this would have interest rate implications. Right now, financial markets are positioning for interest rate cuts by central banks, particularly in the US, and that won't eventuate if inflation picks up. The Reserve Bank of Australia is also expected to cut interest rates, though recent inflation data may delay the timing. Before we move to your questions, I'd like to leave you with this. Last year's merger brought together two investment portfolios in a single unified strategy. Since then, we've continued to realise benefits by adding capability and driving an investment program designed to deliver long-term value. With an expanded and highly skilled team, we're well positioned to deliver stronger outcomes and bring our investment vision to life. You can feel confident that we're investing with purpose, navigating change, seizing opportunities, and protecting your retirement savings. If you're uncertain about your super options with CareSuper, our expert superannuation advisors are here to help you make informed decisions aligned with your goals. Thank you for joining us tonight, and I look forward to answering your questions shortly.
Thank you, Suzanne, and thanks to all our speakers tonight, Linda, Jason and Suzanne, for their updates. Now, this concludes the formal part of our annual member meeting. We trust it's been informative. We will now move into our Q&A session. We have received lots of questions from you and we will be addressing as many of these as we can this evening. If you don't get your question answered tonight, we'll include the response in the meeting minutes on our website within 30 days. And a quick reminder again that we're unable to respond to any questions about your personal financial situation in this forum. If you've submitted something specific to your financial situation or needs, our team will reach out to you directly and can answer any questions that you may have. You can also get in touch with us directly over phone or email. Now let's get the Q&A started. First up, we have a question from Jared, who asks, during the recent stories of people losing their super to scammers throughout 2025, how can I avoid this from happening to me? And what systems do CareSuper have in place to protect their customers from this happening? Now let's get started with our CEO, Jason. Jason, can you answer this one for Jared?
Thanks, Jared. That's a really important and topical question given what's happened in Australia over the last 12 months. I'll break it up into my answer into two parts. I'll cover off fraud and scams, but I'll also come back and answer a bit about cybersecurity and what we do. Starting with fraud and scams, obviously the Shield and First Guardian news has been very topical and very impactful for many Australians. So the collapse of those investment schemes that are linked to Shield and First Guardian have been a really devastating reminder of the importance of vigilance of our members vigilance with regards to who you let look after your superannuation, vigilance about what advice you take, and vigilance in regards to what actions you might take with your super or let other people take with your super. As a industry super fund, it's really important that we just acknowledge that CareSuper, which has been around since the 1980s, is a heavily regulated entity, and we take compliance with those regulations very seriously. But to get to the heart of your question about what you could do, I think it starts with advice. If you're about to make any sort of decision that relates to or has an impact of financial nature, I would encourage you to get advice, and not just any advice, obviously, advice from a licensed professional. Extending on that, I'd be very cautious about the sorts of advice and being tempted to, get on social media or other sorts of sources of advice. Even frankly, colleagues, it's worthy of just being cautious about what sort of advice you might extend to in regards to financial services, and particularly with your superannuation, your hard-earned savings. The reason for that is because every investment carries risk, and every investment carries different sorts of risk, and every person has a different risk appetite or a willingness to take that risk. And as we've seen with Shield and First Guardian and the collapse of those and the devastating loss that those Australians, thousands of Australians, have experienced, sometimes that risk is just not worth taking. A couple of other things to be cautious about. If you are contacted by somebody out of the blue and they're offering you some sort of investment advice or opportunity, I think that's a really big red flag. Equally, if somebody's making you feel pressured to make a big decision about your finances, about your superannuation or other investments that you might have, I think that's a really big red flag too. It's really important, and I'd say this to all of our members, to be in control of your superannuation, ask lots of questions, and just be alert to the bad actors that are out there who are obviously influencing people in the wrong way. Two last points on this part of the answer. Just remember that CareSuper offers advice. We have 3 levels of advice as a fund, and that first level, which is about your account, your superannuation, is free, and you can access it and use it as many times as you like. It does work its way up to comprehensive advice, and that is a fee-based advice, but you get a personalised plan with that, which may be suitable for you. Finally, we have a whole range of new information on our website specifically about fraud and scams, and I'd encourage you to go and check that out. If you can't find it, just go to the search bar on the homepage at the very top and type in fraud and scams, and it will take you there. I definitely know it does because I've tested it myself. On the second part of your question, which is about cybersecurity and what we do about that as a fund, this is something obviously covered a little bit in my opening speech, so I'll just sort of try and truncate the answer here so we can get through some more questions. But let me first assure you that some of the news that you may have heard about with cyber events and the superannuation industry did not impact upon anyone at CareSuper. That said, our vigilance has to rise with this threat. It is important that all of our members understand that we as a fund are obviously trying to rise with this challenge, and that challenge comes from all sorts of places. So just for context, of course, as the superannuation industry has grown to be now a $4 trillion pool of savings, the bad actors, the criminals, the cybercrime criminals, etc., around the world have become aware of it. And as a consequence, they're very keen to get access to it. So we all must be alert. So what do we do specifically as a fund? Well, we have a number of strategies that we have adopted and that are in place. Things like having multi-factor authentication. We were an early adopter as a fund of that, and we have verification codes as well, which you will have experienced if you have interacted with your savings. We also have specialist financial crime teams in-house, and we have a cybersecurity team in-house, and we supplement those teams with external experts that help us with our the capability that we need in order to keep fighting off these challenges that continue to rise, and having the right expertise in-house is obviously an incredibly important part of that. We are continuously monitoring our systems, and I think that's really important to know, and we're looking for suspicious activity, and we always are looking to strengthen our fraud and cyber controls. So that's some of the activities that we have in place as a fund, and apart from obviously continuing to invest in the systems of our fund, which again is an important part of those defences. But I would say, Jared, and I'd say this to all of our members, the defences and the efforts to really protect your savings requires teamwork. It requires us as a fund to work with our members very closely. And the reason for that is those criminals that we talked about earlier who are keen to access your superannuation, the fastest way they can do that is what I'd call straight through the front door. And that's why having your credentials safe is critical. Having strong passwords. Don't use those passwords for other uses, other providers, other services that you might access online. Renew them or refresh them regularly, and obviously never share them. And know that we will never ask you to share that information with us when we ring you or if we engage with you online. That is something that is worth being very, very cautious about, because these very criminals that are out there are looking to engineer you socially to try and get access to your credentials or try and influence you to get information that they might then use against you. Should you ever experience some sort of real or near concern that you might have had, some sort of threat that might have occurred to you, if you felt you might have lost some of your credentials or anything similar to that, I'd encourage you to contact us very quickly. Equally, that may not be just about your super fund, but any other event that you've experienced with your other accounts. It's always important for us to know quickly, because there's things that we can do to help protect your superannuation. And lastly, there is also information online on this topic too, and I'd encourage you to engage with that.
Thanks so much, Jared. What a great question, and what a great opportunity for Jason to share with all of our members some of these important tips. Now, our next question is one that a few members have asked us. With the uncertainty in the marketplace due to the US tariffs, how is CareSuper discriminating between investment opportunities that are less likely to be affected by the fluctuations they will impose? Now, great one for our CIO, Suzanne. Can I hand over to you?
Thanks, Ning Ning. Thank you very much to the members who offered that really great question. So it's a question about how we choose between different investment opportunities. So finding those that are less impacted by something negative. And in this great question, the members referenced US tariffs and fluctuations, but it's also about how we find those investments that have got really great prospects. So as context, I did mention in the presentation in talking about the outlook, uncertainty and change, and we do think that the investment environment in coming years will be different to the past. So that's why being able to thoughtfully choose investments is really important. So specifically to the question, how do we do that? The main way that we make those choices and those decisions is through what's really central to our investment approach, which is being active investors. We're very active in our investment program. It's central to everything that we do, and I think it's good to reflect on the fact that not all funds invest actively. There are very different approaches across the industry. So when I say active, what does that mean? Well, it means that we choose everything we invest in on your behalf across the investment program. So we carefully analyse everything, individual assets, individual securities, specialised investment managers, particular types of funds in different asset classes, but importantly being active between different asset classes and allocating according to the prospects of each, the investment cycle and the changing environment. So analysing and selectively thinking about everything we invest in for you is really important. It allows us to incorporate structural trends or deal with emerging risks. There are a range of advantages from that. So what we don't do, we're not passive investors. That's an investment approach that involves just replicating an index. That can do well for periods of time, but in the long run, we believe that being active and selective is going to give our members the best outcomes. Thanks, Ning Ning.
Thanks so much, Suzanne. Now, changing topics, we've actually had a couple of questions about our growth plans. This one's from our members Gail and Orit. Will there be a merger with another fund? Does CareSuper have future growth plans? I think Linda, our chair, can answer this one for our members.
Thanks so much for the question, Gail and Orit. First and foremost, I just wanted to reassure you that the board takes every decision about the growth of our fund extremely seriously. Each proposal to grow is a very rigorous assessment to ensure that it firmly is in all of our members' best financial interest. Retirement is a long-term journey, and we manage your fund with the same long-term perspective, prioritising sustainability and security for decades to come. Sustainable growth is absolutely central to our strategy. This also means growing organically. We want members to choose and to stay with CareSuper to experience our award-winning service and the care that you all deserve now and through retirement. And growth, of course, is what helps us remain efficient, resilient and financially strong so we can keep delivering value to all of you. Scale does matter. It ensures and enables us to offer affordable products and services, keep our fees competitive and access compelling investment opportunities on your behalf. Recent mergers have strengthened our position. For example, our merger with Spirit Super has already delivered significant savings for members and also expanded the range of services and products that we can make available to all of you, our valued members. We're so proud to be in a really strong position to continue delivering long-term performance and award-winning service. Mergers are never taken lightly. As I said, they're obviously complex decisions and our responsibility is to ensure they serve your absolute best financial interests. Every merger we have undertaken has been governed by strict regulations and involves a comprehensive process of due diligence, always with your needs as members at the forefront. Right now, CareSuper's focus is on delivering the best possible value, service and performance for all of you. We're investing in our people and our technology to enhance your experience, to strengthen our digital security, as Jason has outlined, and to support sustainable growth. Obviously, Australia's superannuation industry is consolidating rapidly and we must keep moving to ensure you continue to receive the value you deserve. We do have a really proud track record of successful mergers that deliver positive outcomes with partners who share our vision and member-first philosophy. Every merger is unique and our people have been instrumental in delivering multiple mergers and integrations while maintaining really, really strong service levels. So please do rest assured that our board is always very focused on this and we will always ensure that all our members know if there are future strategic plans with respect to mergers. Thanks, Ning Ning.
Thanks so much, Linda. That's great. We actually have a few questions tonight coming through around online access overseas. Online tonight, we have our Chief Operating Officer, Kathleen Crawford, who's here with us. She is live from Hobart. Now, Kath, can I ask you to please address these questions from members Abs and Kate, who ask us, when will you provide online access to members who work overseas? Kate, in particular, has asked if she's able to access her account from Taiwan. I'll throw to you, Kath.
Thanks, Ning Ning. Thanks for those questions, Abs and Kate. It links a little bit back to that first question that Jason answered around security of your account. So CareSuper does have strengthened security controls around our member online portal and member apps while people are travelling overseas. In some countries, ones that have been identified by the Australian government as a high risk for fraud, we limit access to member online and the CareSuper app. This is called geo-blocking, and we put these cybersecurity measures in place to protect your money. If you're impacted by geo-blocking, you will still be able to transact on your account using paper-based forms, and you may be able to complete some transactions over the phone. After feedback from members, in September of this year, we extended international access for members living and working overseas. And Kate, the good news is Taiwan is not currently on the list of geo-block countries. So you should still be able to go to Member Online and use the CareSuper app. A quick tip when you're downloading the app, make sure the app is set to Australia, the App Store is set to Australia before you download it from overseas. There is a list of countries on our website that are geo-blocked. So if you are planning a trip overseas or moving abroad, you might need to plan how you manage your super account while you're away. As always, please contact us directly if we can help in any way. Back to you, Ning Ning.
Thanks, Kath. Some really great questions coming through from our members. Now, another one here, I think we're getting a lot through from our members around comparison to other super funds. I will throw this to Suzanne. How does CareSuper compare to other super funds?
Thanks, Ning Ning. Thank you very much. And thank you to those members who have asked that important question. And we know our members like to do comparisons. That's fantastic. Usually those requests and comparisons that our members discuss with us fall into sort of two dimensions. They're normally either about how we invest or they're about performance. So I'll make a couple of comments about both. Now, I've already spoken about our active investment approach, and that is certainly a point of difference in comparison between CareSuper and some other funds. Another distinctive feature is the level of diversification that we have across the investment program. So we very much value diversification and having a very broad mix of exposures across asset classes. What we're trying to achieve is avoiding overexposure to any individual particular asset class or type of investment. We don't want to be excessively reliant on individual assets doing well at any particular point in time. So what that means and what that achieves is that allows us to give steady, consistent results through time. But it does mean that if one particular type of investment does really well in a short period of time, we might have less of that investment. Now, that's absolutely what occurred last year, and I spoke in the presentation about the really strong performance that we saw last year from shares. We held a little bit less in shares than some other funds, and that will make a difference to a short-term result. So that second dimension of comparing performance is an important one. I've spoken about shares and the impact there, and I also spoke in the presentation about how our results across our options last year were strong and in most instances even higher than the long-term average. But nonetheless, due to that influence from shares, our one-year results were a bit lower than some other funds. We do know and understand that members realise that in any individual short time frame, the very specific events that occur in that year or that particular quarter will make a difference, but it's the long-term results that are important. We know that the particular investments that did well last year, even the funds that did well last year, won't necessarily be the same ones next year. So we focus on, and we hope members focus as well on really what makes a difference for them, what makes a difference to retirement, and that's strong, consistent long-term results. Our investment program is designed to deliver those long-term results. It is our focus, and we do believe members should place their emphasis on long-term results as well for that reason. It's really what drives what happens to them in retirement. Our long-term performance is very strong. We have a proud history of being, amongst the top-ranked funds in the industry throughout our history. But there is variation in the short term, and we know that, and we understand that members do look at that from time to time. Thanks, Ning Ning.
That's great. Thanks so much, Suzanne. A really great reminder of the power of diversification and the long-term performance. Now, the next question we have is in relation to our board. Our member Leon asks, I have some questions about the fund's governance structure, including the board's composition and any recent changes. Let's give this one to our chair, Linda.
Thanks so much, Leon. It's such a great question to ask us about how your board is structured and how we govern CareSuper. It's really important to understand that our board and our responsibility is always to you, our members. It's our board's key responsibility, in fact, to ensure that CareSuper is managed in the best financial interests of all of our members, and obviously good governance is absolutely essential to that. We're very open and transparent about the way that we operate. We meet rigorous standards. We have many policies and procedures to make sure that everything is managed with members at heart and also obviously in accordance with the law. At CareSuper, we recognise the importance of having a diverse and skilled board to oversee our strategic direction and decisions and to ensure all of our members are at the heart of what we do. Our board at CareSuper is what's called an equal representation board, comprising of 6 member representative and 6 employer representative directors. And those nominating bodies include unions, motor trades and business chamber nominating bodies. Equal representation means that our members' voices are carried through the organisations that serve you, such as those industry bodies that I mentioned, ensuring that your interests are fairly and consistently represented in decision making. The makeup ensures a balanced and equitable perspective that reflects the interests of those who we serve. We remain committed to working collaboratively to deliver the support, advocacy, performance and award-winning service to all of our members and our employers who expect and deserve us to perform and govern excellently. There are obviously very strict rules embedded in law and Australian regulation about how our board members are nominated, appointed and removed. And we constantly look at our skills matrix to make sure it's maintained. And when we have vacancies on our board, we make sure that we use this skills matrix to communicate with our nominating bodies about the skills that we need them to prioritise for us and then through the appointment process. We regularly evaluate the performance of our board and our directors to ensure that every year this is considered by the board, and at least once every 3 years our board undertakes an independent performance assessment carried out by someone outside of and independent from CareSuper. This year, I do want to again call out, we've farewelled several dedicated board members who really made incredible and invaluable contributions. They were appointed for initial terms of 3 years and many of them served for many years. So I do really want to call out and thank those members. In particular, as I did in my speech, I'd like to call out the former Spirit Super Chair, Maria Wilton, who served with absolute integrity, and we're so grateful for her service. All these directors, though, that have retired from our fund in the last year were instrumental in working collaboratively, particularly throughout the merger period, to achieve the significant transformation for our combined membership, and I give them, on behalf of our board, our enormous thanks for that service. Thanks, Ning Ning.
Thanks so much, Linda. Now, everyone, that is all we have time for tonight. It concludes our annual member meeting for 2025. And thank you so much for joining us from all across the country. We really appreciate your time, your engagement and all of your questions. Now, if you have further questions or would like to speak to one of our super experts, please call us on 1800 005 166. This service comes at no extra cost to all CareSuper members, and it's included in your membership. Thank you so much again. And for the questions that we didn't get to answer, they will be published on our website. We so look forward to continuing to support you on your retirement journey and building retirement confidence for all of our members. Thank you again, and bye.
Ever noticed how some things are just better together? Since 1986, we have been supporting our members through their life journeys. Our mission is to be Australia's most trusted super fund for retirement confidence. Together, we'll get there through exceptional care and connection. Care is in our name and our DNA. We're CareSuper, and we're going to be super together.